is a soft landing possible? And by soft landing, and some people say all sorts of different things about soft landing, like, can inflation durably go back to the Fed's target? Durably is an important word. Can it go durably back to the Fed's target without a meaningful weakening of economic conditions? That's what a soft landing is. And, um, I look at the set of conditions here. The markets are saying essentially like, sure, the market's cross asset market pricing is certain there will be a soft landing. And what I'd say is maybe I'm underconfident, but certainty on a soft landing would not be my opening bid for the probability that we get there. And I think that's because there's a number of different paths that are mispriced in the financial market, uh, you know, around relative to that perfect certainty, which is, we may well have inflation be higher than what people expect. Like if you have strong growth that continues and tight labor markets, inflation is probably going to be higher than people expect, in 2024 and beyond. So, things like oil look from a macro perspective. I'm not a micro guy on oil or an expert by any stretch, but commodities and oil in particular look cheap relative to what's priced into growth. Equities, at the same time, so inflationary pressures could emerge at the same time. And then also in that context, if growth continues to be strong, there's no way that the Fed is gonna cut 100 basis points in 2024. No way. Like, just not how it's gonna work, right? If growth continues to hold up, they're not gonna like do a Greenspan tweak of monetary policy to bring it down. So it seems like, those are two places that are mispriced. And then on the flip side, it's also very possible that this doesn't work out in the sense of, um, that the momentum, we've seen some weakening momentum in the economy that could just continue much and accelerate much faster than people are expecting. So you don't get the double digit earnings growth. And so I think it's a hard time because, essentially soft landing is priced in a certain way that the right portfolio of positions is taking on is basically saying, well, the equity market is pricing for things to be too strong, so I want to fade that. But the short rate market is pricing for things to be too weak, so I want to fade that. And the inflationary pressures that are priced in the oil market, inflation and growth that's priced in the oil market looks too weak, so I want to fade that. And so like the combination of different positions are actually like, they're all kind of mispriced in the 60-40 way, although they're mispriced in opposite directions. So, the sort of portfolio that looks interesting today is like short stocks, short rate, and maybe the twos, long oil. That's a difficult combination to conceptualize, but I think uh, that's the reality of where we stand with the markets today.